All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's doing well. I'm going to go ahead and put up the bias chart. You know, it's interesting. After the data, which by the way was fairly strong. The one thing that I have to point out about the non-farm payroll is even though the data was a good read on non-farm payroll, and unemployment rate dropped pretty well. Maybe it's the $1 million number that wasn't achieved that is, keeping the market strong. But remember, the stock market's going to open shortly. So when the stock market opens, we'll see how it's really going to trade. Right now you have the yen, or the yen. I'm sorry, I didn't mean to say that. NASDAQ is down. The S&P and the Dow are stronger. And I think a lot of that is a result because yields are going higher. So as yields go up, it's going to affect some of the growth names. So that's what's keeping a lid on the NASDAQ and keeping the NASDAQ a little weak. So, but it's going to be interesting to see if this rise in yields is going to affect the S&P and the Dow as well. As of right now, it doesn't look like it, but attitudes can change as soon as the stock market opens in about 13 minutes. So with that being said, I'm going to, just so you guys know, I shorted some Aussie. I'm going to be adding on a break below 73.50, just so you guys know. I mean, that's the flag pattern. I'll be, basically starting to play out. I shorted some after the data, as I told you guys I was looking to do. So, strong data, I was going to short the Aussie. So I'm short. I got short. My average is 85. Actually it's 80. No, I just looked at my average. It's 87. So it's not bad. I mean, it's not like, it's not a huge gain or anything like that, but I'm also, still long US dollar against other currencies as well. So I want to add, but the fact of the matter is that the S&P is at all-time highs. So let's not lose the idea that, lose the fact that stocks are at all-time highs right now. Okay. So anyway, I'm just going to make sure everybody's coming into the edge. All right. So let's start with the euro, and obviously and actually, you know what? Let's go to gold. Because gold is really the driver right now that's keeping me in the short Aussie camp and the being long the dollar camp. Look at what gold is doing. Okay, we broke out of the range, so now we have an automatic target of these lows, which comes in at basically, let's just call it 1750. All right, so 1750 is gold support. 1750. We have to be bearish. And I think you have to consider yourself lucky if we get a move back to 1790 today, right? Because now previous support now acts as resistance. So if you get anywhere close to that, you've got to be able to sell into it, right? I don't know if that's going to happen today. I'm just going to tell you that I think you'd be really lucky if you got all the way up there. Okay. Sorry, just getting a little stretch here. Still early in the morning and it's Friday. Let's talk about silver. By the way, Patty, if you're listening in, he shorted silver at 25.90 at this channel resistance earlier this week. Good for you. Damn it. I'm so happy. That's awesome. So let's figure out where silver is going to go here. So, I mean, because you got to imagine that's his channel support, right? So low to high extension comes in at 2407. So let's just call it 2410. I still think silver is acting a lot better than gold. So, it's harder for me to put silver in a bearish designation, knowing that we're pretty damn close to supports here too. So anyway, resistance, I guess, is at 25 bucks. If for some reason it gets back to 25, I think anybody who is long is going to be super happy to get out. That would be my opinion, right? Moving right along. Let's go to the euro. So the euro is really weak here. And I mean, I think the euro is now at risk of a break below these trend lows. So we are at risk at a move below 117 now. So next support is going to be 117.50. We got to put it on the bearish bias. And now any move back up towards 118.30 is a sell. I know I know we are right here. Hold on, let me put it on the daily chart really quick just to make it a little easier. So I know we're, you know what? I'm going to put it on range for now, but you guys know I have a bearish bias with the euro because of what's happening in gold, right? I hope you guys know that and you understand that. So you know, I'm bearish, but I think we've got to keep it in range while we're in this big triangle. But, you know, come Monday, Tuesday, next week, we might be, you know, trading down here at 116. And then, you know, obviously we get below these lows and then you just go into a bearish designation. But right now it's hard to put that just yet. Okay. Especially with stocks, you know, don't forget that stocks are at all-time highs. So the sterling, you know, obviously we didn't break out, which I was thinking, hey, if we got some, you know, weak piece of data, that was going to happen. But now it seems like while we're below 139.50, we have to target 138.30 again. So, and I'm going to keep this in a range, 138.30, 139.50, and keep that in a range. Aussie is bearish. We have a bear flag pattern. And while we're below 74.20, it's bearish. And the Aussie, I mean, we break below, I'm going to draw it like this here. That's better. We drop below 73.50. So it'd go 72.90, 73.50. Okay. Here's a Kiwi. Kiwi is still holding up. I mean, I'm not trading the Kiwi, but 71 cents. And I think we wrote this down yesterday. So let's go 70.20. Let's figure that out. Did we do that yesterday? 70.20. Same crap, right? 70.20. I mean, you know, based on what you're seeing here, I mean, can you see how bullish the dollar I am? I'm sarcastic. I mean, I am bullish the dollar, but you know, our charts haven't confirmed that this is, you know, our charts are not confirming that this is the dollar is ready to go. I mean, look at stocks. Stocks are at all-time highs. You know, look at the dollar Mexican peso. It's at its lows of the day. I mean, that's just it's telling you that stocks are holding up, you know. Dollar CAD. So I drew this trend line earlier, and that means that, you know, we have to get above here. And actually, you could probably draw this more like this, right? Let me get rid of this flag for a second. I'm going to remove it for now. Okay. So resistance here is 125.75. Support. Well, you know what? I mean, for those of you that are really, really focused on the Canadian right now, and I know a couple of people are shorting it. So in our chat room. So if you are, that's fine. Just, I don't think you want to see it above 125.50, right? Especially if we're pulling this symmetrical triangle. What I would be worried about more is if crude started to roll over, which, you know, crude looks a little, you know, little weaker. So, it's weakening a little bit here. So off the high. So anyway, I'm going to write down 125.75 support 124.75, and let's just run it with that. 124.75, 125.75, and I'm going to keep it in range. Okay, because I really don't know what to do with the Canadian. There was weaker data. Keep that in mind. That may feed itself through the market at some point, right? Weaker Canadian data, strong data, weaker Canadian data, stronger US data, right? John said you called a death cross on the euro dollar in a video, didn't you? No, it was a tweet. But I mean, you know, it's the dollar. The dollar had it's the death cross here. The dollar index is the golden cross. So, you know, it's one of it just, yeah, I mean, you got to respect it. I mean, but we've seen a lot of false crosses, and crosses are not like you get in a cross, you get a death cross and it's an immediate reaction going in that direction. And I want to tell you, based on my experience, it almost never is. Almost you could do the opposite when you get the cross, and then, you know, a couple of days later, you know, you see if it follows through. The euro dollar, I mean, this death cross does look not so good. And I remember it must have been last week, maybe it was a week and a half ago, the market was really bearish the dollar. And, you know, everybody's like, oh, look, the euro is gonna bounce off of support, and euro's going back above 120. And I'm like, yeah, but there's a death cross, and that death cross was developed. So that's what it was. I mean, it looks like crap. The euro looks like crap. Ain't gonna lie. And I'm going to tell you guys, if stocks go down, you know, let's just throw out a 5% correction. You know, the S&P goes from 4,400 to
5%. You're crazy, man. It's never going to happen. I'm kidding. I'm kidding.
Yeah, but like if we get a 5 or 10%, 5 or 8% correction, the euro is going to be trading at 115.
Yeah, I agree. Metals are going to be a lot lower as well.
Oh God, yeah, gold's going to be trading at 1650. I mean, you know,
yep.
You know, Aussie dollar is probably going to be at 71 cents. You know, it's just, I cannot express enough that the dollar is just holding up so well in this environment that any type of risk off, anything where you get people a little freaked out about tapering or whatever they're freaked out about, dollar is going to be a beneficiary, you know, and I would not want to be short the dollar right now. I just wouldn't. There's, yeah, no way. Anyway, Swissy. Swissy's had a nice move off of channel support. Resistance is coming right up, 91.20. I think we wrote that down yesterday. 90.75, 91.20. So 91.20 is it. We're almost there. Right there. So now any support back to the 200-day moving average is going to be very well supported. That's 90.75. So I think anybody who's short the dollar Swiss is going to be like, oh my God, thank God we dropped to 90.75 because I want to get out. Right? It's still a range. It's a range, as you see here, and we're in a bearish descending channel. I don't really call that bearish, but it's a descending channel. So just respect it, you know. We break above 91.20. We're probably going to stall here at 91.70 because that, I bet you, is about a 50% retracement. And it is a 50% retracement. That's actually 91.50. So yeah, 91 today, it's about 91.70. I didn't mean to do that. Oh, whatever. Just in case, we'll write it. 91.70. Shoot, I'm gonna Stellian, so you're gonna be here, or are you guys dealing with fire still?
No, I'm here.
Okay. I don't know if Steve's
here too.
Oh, he is? Okay. I'm gonna wrap up analysis for you guys. I know the market just opened here. I'm gonna wrap up analysis. And then we'll go, I'll let you guys go from there, because I have three interviews I'm doing today for Trader Summit. Jim Welsh is going to come in. He was going to talk about, his macro views, obviously. I'm continuing that series with Dick Matthews, kind of that fun series. And by the way, Stelios, I'll follow up with him because I know you guys had some same.
Yeah, we're gonna do one together for sure.
Yeah, 20 years ago or so. How many years ago was that?
15-ish.
15-ish from Barclays. So Barclays, right? Is it
yes, and Merrill Lynch as well. I had the same.
Okay.
I had my futures broker was the guy who was taught by Dick Matthews.
Oh, and that's awesome.
Yeah, we were close. So
that's super cool. So you guys be on the lookout for those. And then I bought also one of this guy Eric. He's a macro guy. He works with Lynn Alden quite a bit, and I'm going to do an interview with him. Actually, give you guys more of an introduction to who he is here in an hour. So I need to finish up the analysis, and then I got to take my kid for a COVID test. Yeah. So anyway, 873 resistance, 885 still. You know what? I'm going to write down 895 just in case, because crude looks like it's going to roll over. That's just my opinion. 885, 895. We're bullish while we're above 870. So just remember that. 870. And I'm long. I'm just, I kind of want to add. I just don't. It's hard for me to add when stocks are so strong. It just is. And the US dollar, Norwegian krona just won't get up and go while stocks are holding up like this. Dollar max, 1970, capped at 20, same as yesterday. I mean, stocks are getting let's take a look at the market. I mean, look, we're at all-time highs. Woo-hoo! Imagine that, right at the open, all-time highs. Look, we are at 40. This is very much unfinished business here. So we finally hit, I'm going to write it down too, 44.40. I still think it's significant. I don't know if we're going to break that today, but I will put 44.95, which is the 161% extension. And while we're above, don't forget, while we're above 43, I'm not trading the S&P right now, but if I was trading the S&P, I'd short it right now. I'm just telling you guys. I'm just saying that just to blurt it out. I'm not shorting it, but if I was going to trade the S&P, I would be selling it right now. I'm just not going to. I got too much other exposure. For me, I don't. If I'm already positioned for risk off, which I am, being long the dollar, I can't just start shorting the S&P, shorting gold, buying the dollar, and because next thing you know, if the market turns on me, I'm instead of being down 3%, I'm down like 7. And then I've got a problem, right? From a risk management standpoint. So if from a risk management standpoint. So again, if I was not in any dollar positions, I would be shorting the S&P right now. That would be my go-to trade right now. We broke the highs. We were holding 44.30. We pushed to the 127% extension, just enough to get all the shorts stopped out. Then I just turn around and short it. But again, I'm playing the dollar on the long side, so I can't do both. I can't do it all. Hopefully that makes sense to you guys. That makes sense to you still? Am I talking gibberish right now?
Yeah, you are. No, makes sense, man.
Okay. I'm glad. All right. So 618 retracement, 92.65. Lorraine asked how my son is. He's not good. He's not, at least not last night. It's early, so he's not. He is an athlete, and he is not good right now. So 92.35 is support. Resistance is 92. What did I say? 92.60. But thank you for asking, Lorraine. I feel like I've known Lorraine for how long, Lorraine? I just said Lorraine. How long, Lorraine? Maybe 6, 7, 8 years. I don't know. 92. $65. Thanks, guys. Thanks for the well wishes. I wouldn't have told you, but Lorraine asked. It's really not relevant. But thank you. I appreciate the well wishes. Okay, let's finish this off here. Dollar yen. But we're gonna go get our COVID test, or his COVID test today. I'm just gonna run. I'm gonna make the assumption that I've got it, so I'm not even gonna bother to test myself. I'm just acting like I'm positive. Now any dip down to 109.90 109.90 should be support. We're well above 110. Next move will be to wait. That doesn't make any sense. Oh, I have this drawn incorrectly. Hold on, let me remove that. That's why. Let me reset. There we go. High to low. 50% retracement. 618 comes in at 110.55. So that 110.60 should be a pretty good resistance. Gotta remember that number. We wrote down that number quite a bit. 110.60. Support will be 109.90. I want to say bullish, but I'm not going to. It's bullish intraday, but you know, it's not. I mean, but we're still in a range. I mean, we're just in this overall channel. I mean, today it's probably going to be bullish because of the jobs number, but the trend overall is very much range bound. Bitcoin. I haven't even looked at the charts yet today, but I will with you. All right. So, and 42.5, 36.5, which would be right here. Ethereum is the one that I think is we hit the 161% extension. I think that's the one that you kind of want to focus on. But you know, Ethereum also is trading a lot better than Bitcoin. So anyway, there's your bias chart. I don't think anything's changed. Oh yeah, wait. Yeah, this is it's all the same. All the same. Okay.
Same as it ever was.
Same as it ever was. All right. Well,
okay, you go do your interviews.
I'm gonna go take a shower. Yes, I got to take a shower and go do interviews. So you guys have a great Friday. I don't know who won the non-farm payroll competition, but I'm sure Ryan is going to announce that a little bit later. So anyway, Stelios, happy birthday to you. Happy 50th.
Thank you. It's in a few hours, but yeah, thank you.
I hope you get another 50. And I'll tell you what, based on my experience with Greeks, you have a good shot at it because I've never met so many 100-year-old plus people until traveling to Greece. So I hope you have a wonderful 50 more. So, happy birthday. Wish I was celebrating with you, drinking some wine and playing some pool with you.
Next year, we're going to be doing it for sure.
Yes. That sounds great.
Thank you.
All right, guys. Have a great day and happy Friday. Good luck. Stelios, I'm going to, did you want to do anything or are you good?
Well, Steve's here if he wants to go over anything. I have a couple of things to say, but really,
is Steve here? I mean, I
sure?
know he's. Oh, you are. Okay. Hey, Steve. All right. Well, I'm going to turn it over to you guys. Steve, good luck with, and you guys, good luck with the fires.
Thank you.
Things are, getting bad here.
I remember the people that we went to go visit in Oregon a few weeks ago. Last year in Oregon, it was so bad because it's Oregon where they live. It's all pine trees, right? So it was so bad that they actually had to tape their windows and their doors just to make sure that nothing could get in. The pollution was so bad. I mean, like dangerous. So
situation is getting there as we speak, and the problem is that we also are in the middle of a amazing heat wave. So
Yeah, I'm lucky. I'm lucky. I live in the south near the sea, so I
yeah,
I won't
Stelios
have
is
much of it.
several kilometers away. So
Yeah, you're in
situation there is,
Europe
yeah,
north, right?
I'm at the north suburbs. It's a lot norther, but still, it's fires are so big that the cloud and the dust and all the particles in the atmosphere, they travel a lot. And
in June this year, I probably would count probably about 5 days. I would walk outside in the morning when it's pitch black, before we'd start the morning webinars. I would walk outside and it would smell like forest fire.
Same situation here. The problem is that today, a few hours ago, it started being bad enough that the smell is entering the house through the air conditioners, even though they do have filters and all,
Yeah. All right. Well,
so
good luck,
we've
guys.
now
Thank you.
switched them off, and probably, after the webinar, we have to start packing and go. Otherwise, we'll either have to be melting from heat or smelling,
hospitalized.
burn stuff. Yeah.
Okay.
Guys, well,
thank you, Blake.
I'll let you guys go. And I'll talk to you guys later. Good luck this weekend.
Good luck with the COVID
get out of town. All right. Thanks. I'll be pushing some interviews out towards you guys. All right. See you guys later.
Thanks.
Bye-bye, mate.
Bye.
Okay. Do you want to take the screen, Steve? I don't have that much to say. I am.
Yeah, absolutely.
Obviously, the main event was payrolls, and it came in better than expected. Unemployment rate was probably what's pushing the markets in more of a happy place, let's say. So, but again, we're seeing the dollar move a little bit. Not massively, but it's moved. What is it, 30 pips or something like that, euro dollar. But as always, as it has been the case in the last weeks and months, it's metals that are really, really underperforming.
Yep.
And I don't get it. Yeah,
we talked about it. I mean, technically, they did look. Gold yesterday was toying around with the possibility of a breakdown from this channel, and they were looking like they wanted to move lower. So I never fade technicals when we're talking about short term because
yes, absolutely. I think gold can easily get to what is it, 1670 or something. There's big support there.
Oh yeah,
so $100 below.
I wouldn't even be totally surprised to see a lower low.
Yeah, could do that to fake out a few people, and but they are looking weak. And my view. I'm a very, very big bull in the medium term, but at the moment I have a very small position a lot smaller than I want to have in gold, silver, and miners, and I'm just waiting to add quite a bit more lower. So it's I am bullish, but I think short term the move doesn't look good. It looks pretty weak.
No, it doesn't.
So I don't want to fade it here. Yeah.
Technically speaking, they both look bad. Silver, key level for silver is now $23.
23,
yes,
22.80 probably, but yeah, 20.
Yeah, but this is where the symmetrical triangle trend line support passes from as we speak. Broke through this little pennant, trading still within this descending channel. In the case of gold, we already saw the breakdown, and quite a persuasive breakdown from this ascending channel. So definitely the path of least resistance for both of them remains to the downside for the time being. We talked also yesterday about platinum being in a downward move within this channel. I think there is more room to the downside for the time being. Palladium, though, completely decoupled from all that, still consolidating, and copper, since we're at metals, completely decoupled, doesn't, it's not affected by the same things that affect monetary metals. So, yeah.
And the other thing, yields are rising, but again, within, if you zoom back and you go on a daily chart, it's still sideways chop. So I'm not
Yes,
treating
it
it.
is, although technically speaking,
It's
Stelio.
showing signs, yes.
Yeah, and if we do break through this blue trend line I have here in the 10-year yield, for example, if we're talking about the 10-year treasury, then we trigger this double top formation that is going to be the first upside breakout in quite some time, right? Now, following that, it's also, by the way, the 200 DMA also confluences with this trend line resistance at 132. I'm talking about yields now, 1.32% yield. We break through that, then we target this descending channel trend line resistance currently passing roughly from 145. We break through that, and in my opinion, we are on our way to higher highs in yields. So bottom line, to yields above 1.8%. So one step at a time. Currently, key resistance area at 132 roughly. So this is the first pivot area. If the bears want to stay in control of the yields, they need to do something and reject that area. But for sure, the reaction to the employment data has been positive dollars. Obviously the market is still, I've said that before and I'm going to keep reiterating it. And I'm pretty sure as I've been vindicated in the past, that's going to be the case here as well. The market is here delusional enough to believe that good jobs data is going to move the Fed to some kind of a 180 degrees turn having to do with monetary policy. They don't realize the reality that the Fed does realize, because I've said before, there are two cases about the Fed and Fed governors, etc. One, they're completely clueless and stupid. Two, they're lying because they can't tell the truth. Of course, the bigger possibility being the latter, right? So they remove monetary stimulus and suddenly you expose all the real existing and huge weaknesses in this quote unquote economic recovery. And then you have to go back to doing the same thing again while having lost more credibility in the market. So yes, I do think that eventually the Fed is going to do something in the opposite direction having to do with monetary policy, but I still think it's going to be much, much less than the data would require them to do. And that's what people should be focused on. But people still believe that, positive data in combination with moving away from the COVID crisis is going to bring rate normalization. And they seem to be completely forgetting that in the short-term attempt that we had to start normalizing interest rates, they completely failed and had to reverse course before we had the COVID crisis, right? And people seem to be forgetting this, that the attempt to normalize rates,
the taper tantrum, right?
Yeah, failed pre-COVID, and then COVID was an amazing excuse, to push forward with accelerating monetary easing. And as I've said before, I think that's going to be the turning point in the markets in realizing that the Fed cannot be ahead of the curve. It can't be even closely following the curve, and it's going to be staying, far behind the curve. And that's when I think that the dollar is going to get completely derailed and monetary metals are going to explode higher. But until that happens, we have to keep focusing on what the technicals tell us. And the technicals for the time being in the metals, for example, tell us that the path of least resistance is lower, right? Now, having to do with if today's post NFP event having to do with the dollar pairs is an event that in essence signals that there is more to the dollar's correction higher, and it didn't top off at 93.15, whatever that high was over there, somewhere there. Yes, there is a chance. Let's first of all see how we close the day, right? We didn't have, you know, any big move lower yet. So I've been saying since the beginning of the week that the jury is still out having to do with what the dollar is doing because the technical signals are mixed. I kept saying that as long as the environment that in the financial markets is mixed and cloudy, I have to revert to my general thesis, which is, lower the dollar, etc. But that doesn't change the fact that I do believe that we're still in murky summer waters, and reduced liquidity definitely doesn't help. So I definitely don't exclude the possibility to see more dollar strength. My initial upside target for the dollar, anyhow, for this corrective move to be over was probably anywhere between 94.50 and 95. So perhaps we will push towards that area, right? In any case, I think this is going to be an important day. Let's see if the dollar can close the day strong, right? Because it has been having a strong reaction higher and undeniably. Let's see if we can close like this, and we can reassess starting on Monday. Definitely, the euro is taking one in the chin, and I remind you that we've been monitoring this symmetrical triangle as the potential bigger formation here, and the euro USD is approaching the trend line support once again, right? We're actually very, very close to it as we speak. I mean, what is it, like 15 pips away, 20 pips away, something like that. So I would, I would definitely be watching this, because if we break and close below this trend line support, that is definitely bearish development from the euro. And, the euro is a huge component of the DXY, which means that the DXY is also going to be resuming to the upside. Now, admittedly, other pairs are not doing as bad as the euro is. The cables reaction, for example, is much, much more contained. As we speak, the daily candlestick is just another inside candle, so another indecision candle so far. Aussie and Kiwi, yes, they've, pulled back, but, nothing significant, nothing that's, really attracting a lot of attention for the time being. USD CAD, USD NOK, not any big type of candlesticks. Although I have to remind you that these were the two specific pairs I was mentioning that were pointing in the other direction, having to do with the dollar. So, these two were showing more weakness against the dollar than the rest of the mainstream currency complex was, right? So perhaps they were the ones being right. As I said, I think we're going to find out within the next couple of trading days. Now, what remains unchanged, unsurprisingly, once again, I mean, yeah, it's become hugely boring, is stocks. Stocks don't seem to have a big problem moving higher, or anyhow holding the ground with a bearish dollar, with a neutral dollar, with a bullish dollar. They just couldn't care less. And this amazing type of strength that stocks have no problem shifting their correlations on a daily basis as long as they keep doing what they're doing, is is an impressive spectacle, right? That you shouldn't ignore, right? These are not the type of markets you want to be fading, right? Yeah, I know they're extremely overdone. Yes, I know they are diverging in some time frames having to do with momentum and some indicators, but really none of that is enough to try to fade these markets, because these markets, as I was saying a couple of days ago, have the potential of even going parabolic, right? We've seen before persistently bullish stock markets during the past few years. It has happened, a number of times. that instead of actually retracing lower, they end up accelerating and going completely bananas, going completely vertical before they implode, temporarily. So I was saying a few days ago that don't forget that there is the possibility for an outcome like this. So, but especially if something like this happens, those that are trying to fade strength might find themselves in a very tough position. Of course, fundamentally speaking, with whatever value this type of fundamental analysis has in nowadays markets, there is the potential for the stock market today to follow the exact same path that the dollar is following, having to do with its logic, and meaning saying, better data. The Fed probably will do something and they're going to start tapering faster than we thought or whatever. And, this is definitely not good because this is the, stimulus that is holding valuations, to the, unimaginable levels they've reached and ending up selling off. So yeah, that's not unlikely to happen, to get a delayed response from the stock markets, as short-term, like kind of, hawkish upcoming type of scare. But, don't really bet on it, right? Because as I've said before, we've seen these stock markets ignore any type of negative or bearish factor again and again repeatedly and do what they want to be doing. So yeah, not an easy market to fade. I can tell you that much. Anyhow, that's it more or less. Nothing else has changed much other than this temporary reaction in the dollar. For example, crude oil hasn't been doing much. We had a little bit of a recovery yesterday, continuation earlier today, which reversed. But I think we're still within some kind of a corrective pattern. Natural gas remains, very, very well bid, unchanged on the day, despite being lower, earlier. So we covered the metals as well. I don't think there is anything really substantial to mention other than the monetary metals and the move they've been doing, which, as I said, technically speaking, you have to trust this move in the short term because it looks legitimate, right? Gold was looking like it wanted to break down since yesterday. Silver, we knew it had more downside, up until $23. It's an easy move to happen without even disturbing the medium to long-term outlook. So platinum was already in a in a short to medium term downtrend, correcting its prior gains. So yeah, that's it more or less. Anyhow,
I don't know if you have anything else to do. We need to give the webinar back to Blake because he has a couple of interviews to do. So any last?
We need to give Zoom. You mean to?
Yeah.
Blake. Yeah. Okay.
What did I say?
The webinar, it's okay, mate.
Yeah,
Steve, isn't that the reason for yields to stay lower because the bonds markets know that in the short term there is no raising rates anytime soon? Maybe not even the thing, Filippo, and I'm going to answer this question, and then yes, sorry guys, we have this interview, so I'm not going to answer your questions today. And anyhow, I want to pack up, and we have to leave. I explained the reasons, unfortunately, before, so there is, we have special circumstances today, but I promise I'm going to answer all your questions on Monday. Having to answer these questions, the thing is, Filippo, that the market cannot at the same time believe A and opposite of A, right? So for the time being, the market believes that the Fed is actually going to do something. So as long as the market believes that, rates can definitely move higher, definitely, right? Move higher, because if the Fed steps off the pedal, right, then yields should more easily climb higher. And I know that it sounds counterintuitive, But keep in mind that you have to think in a counterintuitive manner. Why do you think that yields are under pressure? Why do you think that bonds are so well bid? No matter what, among other things, the biggest buyer is the Fed, central banks, right? If the Fed wants to step off monetary easing, one of the things they have to do is start buying less bonds, right? So the biggest buyer of treasuries, if that's the case, will have to significantly reduce the buying they're doing. So keep that in mind. Okay, guys, thank you very much. Have a wonderful
Thank you, everybody. Thank you,
weekend.
Steve.
Don't forget to join Blake in exactly 2.5 hours from now for the daily roundup. Bye-bye.
No, there's no daily roundup today, is there?
Oh, yeah, it's Friday.
Yeah.
Disregard that.
Thank you,
Don't join
Alexander.
Blake.
Yes.
There's not going to be any daily roundup.
All right.
Just enjoy your day and see you Monday morning. Bye-bye.
Thanks, everybody.